Okay, I think we have good number of people who have joined. So, since you have liked this the most, let me start with this. And you can also type in more. If something else comes to your mind, type in here in the group what you want me to cover. But in the meantime, I'll get started on this. So, what do you think we should focus on our long-term investments this year in this raising rate environment? Some names you think are good entry points. And Ratnakar's daily and weekly also kind of matches with this idea. So let's take a look at the market itself first. So I want to go back to what happened when the interest rates were going up last time. Okay, so let me go to weekly and go to maybe 10 years of data, and let me just add some simple indicators here. Okay, so the last Fed tightening, some of it happened here during this period where the liquidity was tightened. When I say liquidity was tightened, is you must have heard the term quantitative easing and quantitative tightening. So Fed was trying to buy junk bonds. If you remember, after the housing crisis, the financial markets fell in 2008, 2009, right? And the subsequent housing crisis that arose out of it. So Fed started buying a lot of junk bonds, and they started cutting it down, the buying program, and eventually raised the interest rates here. If you guys remember what happened, this was one of my best trading periods, towards the end of 2018. So we are in a similar situation. So Fed, let's just zoom into this part. Okay, actually I selected the wrong area. I want to see the entire 2018 so that we can compare it. So I'll select from here to here. This is almost the entire 2018, right? So we were in this period, January and February, where market took a dip, it bounced, consolidated for some time, and then it started going up again, and it kind of broke out above this January high. And this is when Fed came and said, we are going to raise interest rates. And market took a dip. You can see 1, 2, 3, 4, 5 weeks continuous dump, and then it rose for 2 weeks, and then again 2 more weeks of dip, 2 more weeks of rise. So this is the choppy area that we are entering now. When Fed announced that they are going to raise interest rates, that was in December. I actually thought, I think it was in November. I actually thought that the market will not immediately react and it might start towards maybe February. But the selling started a bit early in the first week of January. I was actually hoping January to be like this, where we are going to go up, and I expected February to be like this. First week of January, in fact, was not so good week for me because I was kind of positioned in a bullish way with all the options, but it didn't work out. Immediately, I changed my direction and eventually recovered some of those losses. But this is the kind of period we are entering. And since this is weekly data, see what is happening when the market takes a dip and it is coming back to its 21 period moving average. That is as high as it can go. And fast forward to now, where are we? So I don't expect this to be, broken in a very big way. Probably we might try to hit the closing levels over here and the opening level over here, which comes to around 4,500. That is at the max. So where are we? About 40 points away. So I expect maybe uh, some upward movement for 1 or 2 days, because the kind of bullish close we had on Friday, it can still further continue on, but it is coming close to a resistance. And if you see here, it is pretty much working out the same way compared to 2018. 4 weeks of down, 2 weeks up, 2 weeks down, and then 1 week up, 1 week down, and we are here. So what happens when it comes near 21 EMA? We will see there again. I'll just zoom into this part of 2018. And mind you, this time, let me give you some background of what happened in 2018. Fed said we are on autopilot mode to increase interest rates. And that's when market panicked and it fell. And autopilot mode in the sense of raising 0.25 or so every 2 to 3 months. That is what they mentioned here. This time, it is going to be even more brutal. What Powell said is 7 rate hikes. I think he hadn't told that all these days. Only Bank of America predicted 7 rate hikes by Fed. So what Jay Powell had said is at least 3 hikes this year. But with latest FOMC, he said 7 hikes, which is kind of bearish, or extremely bearish actually. But the market rallied. And even I expected, if you remember in the last week's call, I said, don't be short after Wednesday, after FOMC. And we had a big move to the upside, right? So the main part is we were at extremely low, extremely oversold conditions. We were due for a bounce. 0.25% in the immediate, in a short-term view, is really bullish. Market maybe was expecting even up to 0.5. So even last week I mentioned anything below 0.5, market will rally, because even 0.5 was already considered, right? So that is what we got. And let me go back here. 7 rate hikes. What is going to happen with 7 rate hikes? Market created this way with just 2 to 3 rate hikes. And forget about new highs in SPX. It's not going to happen, in my opinion, this year, or maybe towards the end of the year. It can happen, but I don't want to take such a long-term view. My view is only for the next couple of weeks to next couple of months. Okay, so max to max 4,500 to 4,550. Then we are going to see another major pullback. And okay, can you guys please go on mute if you're not talking? So now coming back to what will work in this, I think second part of the question, okay, let me go to the 401 and IRA, focus on long-term investments. Okay, I will tell you personally what I did. I am completely invested in 401k at the moment. I had taken out some towards the end of December, and I've been slowly adding back. And Monday, I was completely back into the market. And now even I am in 2 minds whether to take out some here or I don't know how long this rally might last, because QQQ was at extremely oversold levels. It dropped almost 25%, I think. How much? 4082, 317, right? If we take it 318, 408 minus 318, 90 on 408 is 22% drop. So this almost entered correction territory. And if you see here, this has still room to go, maybe up to 359, this 21 period moving average. But after that, I would be a bit careful. I would not be maybe completely invested in the market. I might take some 30% off the market. I'll still keep 70, because what happens is majority of the stocks have already fallen. Only the big cap names is still holding up the index. It is the Apple, Microsoft, Google, Amazon, Netflix, Tesla. These are the big cap names which are holding up the market. So our 401k, majority of the portions, I think it will be in the big cap names, but they also invest in some small cap and mid cap names. So you can selectively go for such instruments, I would say. Maybe mid cap would be a good place to stay invested. And it is hard to time the market, and especially don't mess with 401ks a lot. Moving in and out, trying to time the market is not a good idea.
Okay. Hey, I'd like to add something. So just to continue on what Pradeep said, we've had a discussion on this also, and this is just my opinion. I have made the mistake of taking money out, right? So you have to keep in mind on what your restrictions on what broker will have, because a lot of times when you exit certain funds, your broker would not allow you to enter those funds within 30 days, which I did not know. So within that 30 days, by the time I was already out and by the time I was ready, I had missed a decent amount of rally. And so it is not really advisable to do the whole in and out. 401ks, just continue letting them be. If you got it out at the top, good for you. But it is extremely difficult. And there's like, within 10 years, some study I was reading, it says like 20% is only out of that period of your 10 years, it's 20% that completes the whole rally and the compounding gains. And if you're missing that 20% period, you're really not going to see the gains that you should be seeing in your 401k in the long term. So I personally advise to kind of leave the 401k alone. That's just my opinion. And long term, look for stocks for the companies that are heavy on cash. My personal favorite, Berkshire Hathaway. I know some of you might already have been immune to that, but I bought the dip on 275, and I wish I would have just loaded on that a lot more. But even in this down market, it continues to make new highs. So there will be some stocks. It's just that what companies you want to focus on, and what kind of growth you're looking for. But that's all.
Yeah, thanks, Nick. Yeah, so one thing, there are two parts in 401k, right, where you select how your future investments need to be invested, where your monthly paychecks need to go. I would say keep that 100% in the market, because you are going to buy it at these lows, and eventually one day market will be definitely above this level, right? So future investments, it is good to keep buying. Don't change that. And ultimately, this is not the time to be in and out. Only if you were out somewhere here, good for you, you can get back in. But if you had missed doing that, don't change anything now in 401k. Okay, then what kind of stocks
will work
in this environment? Yeah,
Right.
go
So
ahead.
just to follow up on that, so if you're taking 30% out, I mean, in your case, if you did take out 30% out, would you put that in bonds? Because by from last week's TLT put credit spread, I think you're expecting bonds to go up now. Is that what you want to do?
Yeah, so that again is a good question. It depends on what your company provides, right? Not all companies will provide, um, some safer assets, or they might just provide some fixed income, not bonds. So it depends on what you're going to move it into. If you don't have any better choice, you better stay in the market with stocks. Like my company provides a lot of good options for me to move money out from the market, but in my wife's company, they don't give the same kind of options. So in her account, I was forced to leave some invested in the market. I had no choice. So it depends on what your company is providing. Take a look at that and then decide.
Okay.
So what kind of stocks will work in this environment, right? First of all, I'll tell you what will not work. Let's see again the chart where the interest rates went up towards end of 2018. So this was, did I zoom into the right part? Maybe not. Sorry, just a second. Don't want to see this dividend. Where is that? Equities, show corporate actions. Okay. This is what happened to Apple towards the end of 2018 when the interest rates went up. So from $58 to $35. How much is that? $23 drop on a $58 stock is 40% down. What happened to Google? From high of 1291 to 975. This is again almost 30% drop. So these are cash machines, right? They're printing money every quarter, but they are also not immune. When the interest rate goes up, when the market starts dumping, everything will go down. You need to be very, very careful. So don't think that Apple is safe or Google is safe. But what went up during that time is probably some value stocks. Just trying to see, do you have any good dividend paying stock or some industrials? Let me see what happened to that, because I cannot remember anything. No, even this fell.
Is it Walmart or
Any other good dividend paying stock? Walmart also fell. So when the market is falling, generally all the big cap names will fall. So there is no place to hide. Like it happened from Jan to March of this year, right? Almost everything fell. There was no good place to hide unless you took the market, took the money completely out of the market. But in the long term, these are the companies which will do well, irrespective of whether the interest rates keep rising or not, right? Look at this. Let me go to 15-year chart or 20 years. Whether the interest rates are raising or not, if you are a long-term investor, there is no need to worry. These are the companies which will still survive. If you want to time it, it is going to be really hard. So it's buying on the dip, good quality names with good cash flow. That is the key. Don't buy some junk just because it is very cheap. These are the companies which don't have any cash flow. Loss-making companies, stay out of it. And bear market rallies can be huge. One day you can see that these stocks have jumped 15-20%, but that is the time to exit and come out. Don't be an investor or a bag holder in these kind of junk stocks. So how do you find out whether it is, you have a lot of places where you will be able to see PE ratio, like I think if you go to Finviz, just type in the ticker symbol, you will know earnings per share next year minus 32%. Sales is growing, right? But if you believe in the company, okay, their sales quarter on quarter is great. Or say, for example, Roblox. I like that company, but only thing is it's extremely overvalued. But I know kids use it a lot. I have seen it myself. My daughter playing, and sales 83% growth. As long as you are an investor, and if you're if you're capable enough to hold it for long and don't fret about it that, oh god, it is down 20%, what should I do? If you're entering here, it is good. But if you had entered somewhere here and if you keep averaging down, not a good idea. At some point you need to decide whether you want to be invested or just book the loss and exit. It shouldn't happen like Baba, right? Oh, it is cheap here, it is cheaper here, it is cheapest here. Then what happened? So the cheaper, it keeps on going in cycles. So be careful in that kind of investment. So you can look for whether a company is expensive or not, right? Always look at it relative to its industry. If you want to invest in stocks, since this is a loss-making company, there is no PE at all here. But at least you can see price to sales multiple is 15. For all these high growth names, you need to look at price to sales, because this will be usually blank because they don't have earnings. So how do you compare Roblox and any other similar company you can think of?
Unity, maybe you can look at Unity.
Okay. So yeah, see, Roblox is a better place to be invested compared to Unity software. And also sales wise, this is less compared to the pace with which Roblox is growing. Roblox is much higher, right? So this is how you can just quickly do the comparison if you want to look at compare companies within its industry. Like, let me compare Apple with Google. PE is 27. Okay, or Google might not be a good fit because they announced stock split. Let me look at Microsoft. Microsoft is expensive compared to Apple, right? So you have a PE here. So this is how you can see whether you want to be an investor or not. Trying to pick companies. This is not from trading point of view. Okay, you cannot trade based on this data. I'm just trying to teach you how to be an investor in this case, trying to compare companies. All right. I think I covered enough on that. Anything else you want me to cover? Nick, how do you find the company with heavy cash? Is there a scanner? Okay. Since Nick is not sharing his screen, let me try to show you that. So cash per share, book per share, these are all some of the things which will give you an idea of how much money they have on their books. How much does the company own in terms of cash balance, right? So you can easily scan for this kind of metrics. And Finviz provides a lot of screeners if you want to screen stocks based on let me show you that here. If you want to see something like, okay, fundamentals, and you can see price to cash, right? And you take any ticker like Apple, compare it with that, see whether you're trying to get the correct result that you want to see. That way you can cross check. You have a lot of screeners here. And EPS growth for past 5 years, you can also check that, positive or high earnings per share growth. These are the companies which are growing. Now you will get lost in this 54 pages, right? So you might have to put few more conditions here, that I want to look for some company with a market cap of large cap companies. Then from 54 it came down to 11 pages, right? Add few more conditions, any sector that you are invested in or you want to take a look at. Technology, now it came down to 3 pages. So you can do a lot here in Finviz, that kind of screening.
So also another piece of advice, when you are comparing any companies, when you do that, make sure you compare certain things can be only compared to the same segment or like the same industry. You cannot try to compare Apple, which is a tech, to something which might not be tech. Whatever, I can't really think of other example right now, but it won't be a fair comparison because each one would have a different multiplier and stuff when you start looking at a fundamental basis on doing your research. So
yeah, so you can compare AT&T with Verizon, but don't compare AT&T with Roblox or things like that, right? So always stay within the same industry. That will give you a better picture. Any suggestions on which Roth IRA to choose? Fidelity or Tastyworks? Honestly, I think it depends on what you want to do with your Roth IRA. I personally like Tastyworks because they don't have any restrictions on what you can do in your IRA account. You can trade options, you can trade futures, you can do spreads. You have a lot of options there. But again, you must know that you are dealing with your retirement account, not your trading account. So don't mess up your retirement account.
Yeah, Pradeep, Thinkorswim does the same thing. You can trade. You just need enough balance, even like futures and stuff. So okay. I have my Roth and my other IRA in Thinkorswim. So Personally, that's my opinion. I didn't really enjoy other platforms. I've used both Tasty but to each its own. A lot of people like it, and some don't.
Thanks, Pradeep. Thanks, Nikush. Thank you.
Sure, no problem. Okay. So I don't see a lot of other topics that need to be. Okay, let me cover this one. In the meanwhile, I think this is the last topic I got. If you want me to cover anything else, please type it in the group here. What you want me to cover. TLT, ETF, will bond, ETF, etc. rise or fall with rate scenario? So, Shiva, I'll remember your question on why I took a bullish view on TLT when we know that interest rates are going up. Market is always future looking. If you see here, when Powell announced that he will be raising interest rates back in November, that is when it topped out. Because it is future looking, it continuously fell. And when he actually announced the rate, what happened? It went up. So it is always future looking. Markets in general are future looking, right? A lot of things will be already priced in. Anything other than the one that is not priced in is the surprise element factor there. Otherwise, in most cases, it is future looking. So,
okay. So they buy the future bonds, right? Pradeep, TLT buys the future bonds, correct? The new bonds at higher coupon rate, right?
Correct. So it is the coupon rate that the Federal Reserve will pay. Essentially, government is also taking money from people to run the government, right? So they will be paying a higher interest rate, and if you buy bonds, you will get paid with that higher interest rate. So TLT, I expect it to go up here to around 135 level. And even possibly to this 138 zone with this. It still needs to make some rounding bottom. I don't expect it to go all the way to 138 in a straight fashion. But I think this is the bottom here. On when was this? On the day before Fed or the day of Fed, I think. 316. Yeah, Wednesday was the Fed announcement. I think it made a bottom here on that day. So if you look at a smaller time frame chart, you can actually see the rounding bottom happening here, right? So I expect it to go up here. All right, any other thing? Can you review Hood? Okay, honestly, I was wrong on this. I had bought certain shares and I booked my loss because I don't want to be a bag holder. I had bought it somewhere around this price, but when it clearly broke the support next couple of days, I had to exit. I think I don't remember exactly at what price I booked my loss. These are high value. This is again high growth, and you are paying a premium for the growth, and growth is sometime in future. I still believe it's a good company. They have international ambitions as well. Like the way they revolutionized the free trading in US, I'm sure they'll be able to replicate it in a lot of other countries where people are still paying for commissions. So they have international ambitions. For that reason, I'm bullish in the long term. It is hard to value this company at this price. There's no data here, right? You just have to go on the fundamentals. So at least I can try to do some fib levels. I can draw and see whether it hit a bottom or not. Okay, I don't expect it to be a penny stock, but yeah, it is hard. But okay, let me tell. Just zoom into this part. You see the way it is again forming a rounding bottom here, right? So it is good to add as long as it stays above this level. But if it breaks, and if you have, don't buy everything at once. That would be my advice. It can go up to $6 as well. So if you are okay to buy some here and add until $6 for long-term investment, not a trading idea, I think this should still be a good company in the long run. Anything else?
If no topic on oil outlook, Pradeep, oil is.
I think Om had a better picture on this. So, wow, I hadn't seen this chart myself. Look at where it topped out. These Fibonacci levels are just magic, actually. I think it is still headed higher. War has not ended, and the Russian. This is just the fundamental view again. Russian oil will be. Europe has already committed to reduce Russian oil buying, or I should just say that they have committed. I don't know what the time frame. They want to reduce the purchase of oil from Russia, which is again going to put a huge dent in the market in terms of supply. And when the supply is constrained, obviously there will be pressure. I think it is going to go up higher.
Yes, I think just to add, hello everyone. Yeah, maybe I can take some chart requests at the tail end of the session if you would like to. But on the crude, I think I did predict that around 78 or way long back. Let's say if you cross 92, right? Not sure, like if I recall, I did post here, but if we cross 92, then probably Pradeep was also saying like maybe 99 was our best target, but above 100, 114 was my good target, 114 and 130. I think it did touch 130 crude. Now it is back to 90s, right? So my take is again, I'm expecting it to stay around 160, 150 to 160 again in crude. And that will bring the markets down to around 39. Maybe a 40-20 or 40-70 or 39-40 is expected in the market. I see that crude as able to cross and closed above 100 again, but which is not a good sign for inflation. Yeah, we can expect maybe close to 50-ish, maybe.
Yeah, and thank you. I'm not finding the chart that I had posted. I think I had mentioned that 99 was a resistance, as Anant mentioned. But it clearly broke out above that 99. I think now this is headed higher, definitely. It has found a support here and it is headed higher. But see, now just because I'm telling that don't go and buy crude, because if Putin announces that he's putting an end to the war, it can come crashing down. It can happen overnight. It can be down almost $10 within a day if the war ends. But that will again be a time to buy, because just because the war ends doesn't mean the sanctions will be lifted, right? But be careful trading it.
Yeah, if anyone would like to play some strategy, look for a cheaper premium. Maybe if you're ready to lose, just buy like far out of the money. Let's say one wants to buy 200 strike options. Maybe Pradeep, you can open some options chain for crude. Let's see what is 200 strike trading for probably April or May, because that may be running for about roughly if it is like 5 or 10 cents.
Okay.
Let's try to see in April last, or because I see some reaction is going to happen even in April. But May is also fine. But let's see the premiums, how much the premium is playing out. Let's say if you want to play roughly around 200 strike, right? Yeah. Let's see 200 strike, how much the bid and ask. Yeah, there you go. So trust me, guys, go and I would bet, just go and place a Lodo, 1 or 2 contracts of 200 strike for May, because 5 cents, nothing. I'm telling you, just go and see if you are able to grab it for maybe 5 or 10 cents. Just grab a couple of
I think
contracts.
mid price will be a bit higher. Mid price might be around 25 or so, 20, 25 cents.
Pradeep, can you add volume to it and see? So if the volume is low, I would still say stay away from it. You're better off just buying a spread for a little bit cheaper, closer to it, because it is actually very hard. I have traded future options, and future options, you're not gonna, if there's no volume, even if the price goes up, you're gonna have a very hard time to sell it. So if there and that's opening.
Volume here is around 366. Yeah.
I think yeah.
I would go spend a little bit more money, closer, and just make it into a spread. Once again, if I'm not going to post a trade if I'm not involved, if I'm not taking it on my own. So don't expect me to post. Just a suggestion on certain things, that something to look for when you are trying to buy. And you can see the volume up there. Also, it looks like the May has the highest volume right now, and it's 200,000. So you probably are more likely to find a higher volume in May series, if anything. And if not, then just stay wherever the volume is. You need liquidity to get rid of the future options, and it's not going to be the same. So, for example, Pradeep, you just passed like something I saw, like 12,000 or something. Now that's very good. That's lucrative, right? Right. You go.
September 3rd, and you see that someone is asking that
right there.
Price 10,000.
123. 123, I think, had some big number.
Yeah. But I think for now, the crude is around
120. Yeah, 120 and 123. Yeah, that's something that you want. But look at the spreads. Spreads are horrible.
Yeah, this doesn't make sense at all. See, whenever you see something like this where the spread is too huge, bid and ask, stay away from it. Yeah. You'll have a hard time in getting a fill, and even getting out of that position, even if you are in the trade.
Oh.
So I think my perception is, let me tell you, first of all, I don't trade crude unless if I have to trade the futures, just buy the future contract and play for short term, quick short term with a strict stop loss. Otherwise, like, if I am, if it's like a very bottomed out and there are chances that, suppose say, we were in a situation that, Russia is going to attack and Russia is not going to attack, all this kind of things when it was going on. And at that time, yeah, you can see, you can trade something for out of the money or spreads. But I won't recommend, I think what Nick said also, but if you're trying out, maybe if you get for around like, near the money, even for a cheaper price when there is no volatility much. But again, the war kind of, it might hit the news. Then yeah, that's all. It's all crude is generally it's a news driven, guys. Because in the past I showed you some of the examples. If I drill down, in the past when the Trump era, the Iran news used to happen. Let's say when crude is almost hitting very low and when they need the price to push up, something they're going to say, a BS news used to come that Iran attacked, US marine or some ship. So and suddenly the cruise jumps like around $10. So it's heavily manipulated because it's internationally traded. So I would stay away. I don't want to trade crude because we have many other options. But even if somebody is very interested to trade, so know your levels very, very short and play with the strict stop loss. Otherwise, I won't recommend. Yeah.
Okay, Neeraj is asking energy. So Neeraj, is that the same as crude you wanted to see or anything in particular? Okay, you have mentioned here XOM, CVX, and COP.
So here's also what I would suggest, right? Well, meanwhile, Pradeep is pulling it up. Don't look for a trade into something specific if there's not, as far as the trading goes. So the more you'll continue to look, you're going to eventually make something out of it, and you'll probably end up trading it, even though it doesn't exist. So it's trading is more 80 to 90% psychology, and rest of the things is what what you know about it. But either way.
So Neeraj, I don't know whether you already hold or if you are planning to enter now, not a good idea. As I said, if the war ends, all these things will come crashing down within few days. But that will be a good time to still go and buy if you're not in the trade. Higher oil prices are here to stay. There will be a knee-jerk reaction when the war stops, but higher oil prices are here to stay because of Russian sanctions. That is not going away anytime soon. So if you see the money flow here, right? If you are already invested, stay invested. This is not the time to book profits. I think it is going much higher. As long as crude stays above $70, all these companies are going to mint money.
Hey Pradeep, Nick, and Om, how are you? I'm not in the trade right now for the crude, but just wanted to know if at least we can get some trade for a short term in and out or something like that. Yeah, I know everything is driven by the news and all the stuff, and I remember you always say crude and commodities are news.
Yes. So look at this drop. Actually, this is what I was talking about. When crude fell from 120 to 95 or 130 to 95, right? So this was an excellent. I think it is still in a good place to buy at this price, provided you have a longer term view. Okay, because oil prices will stay higher. let me take a look at the weekly, how it is. Or okay. Yeah, I think it got rejected exactly at the place where it was supposed to get rejected. That is what happened. But I think this is still a buyable dip. If you see, it is still far away from reaching oversold levels on a monthly scale. And I think it is a buy as long as it stays above the 68 level. It can easily retest this 104. What is COP? I think you mentioned COP or ConocoPhillips. Pretty much all of these are looking out. This has clearly broken out. And someone asked how to draw fib levels. So, okay, I think I can answer both of those here. So find a significant top and a significant bottom. Those are the places where you need to have your 100% and 0%. And if you see, I think it is reaching the first level of resistance. If it can close above 105, next target would be 127. So for drawing fib levels, it is left to the person who is drawing it. These are kind of the things which are left to user discretion, right? So if somebody can say that this is a significant top, but to your eye, what looks like a significant top? Is this the correct one, or is this the correct place? I would go with this and this, right? So that is how you can draw fib levels. And you will find that here in the drawing tools, this one, Fibonacci retracement, use that. Abhishek is asking about SPX range for the next couple of weeks. Abhishek, I think I answered that question. So I'll be sending the recording. I don't know whether you joined late. So we are recording this session. You can go back and listen to the first few minutes of the session. We started with that topic. Anything else?
So this is just so you guys know. So this is something for our premium group, and we are going to have a session tomorrow as well. That would be for the free group that we have, and of course the intention is for us to grow as well, and hopefully you guys help us, spread the word and that's of course if you like us and like what you hear, what you see, what we trade. And so feel free to join tomorrow as well. We will kind of cover some of these things to answer to Abhishek also tomorrow. If we may not go into the level of detail that we do here for you guys, that we do for the paid group. So because once again, that is the free group, and its sort of purpose is to kind of market also. So hopefully you guys are helping us out there, and yeah, feel free to join tomorrow as well, and we'll look at that.
If you guys still have, I have one question. This is Raja. You guys can hear me?
Yes, Raja, go ahead.
Yeah. Hey, It's more of a generic market question. I know this was a card witching, and then there's a lot happened. I heard that every hedge fund had more hedges than ever in terms of having puts for their positions, am I right? So I'm trying to rationalize and understand the last 4 days bullish action. I definitely think it's not caused by retailers. It's not by, a lot of retailers are already scared, and then maybe definitely some short covering. How come we have seen a massive rally if already the hedge funds have hedged it such a way, if market would go down, they are totally protected? It's kind of a very heavy loaded question. I've been in market for quite some time, but just trying to understand this whole action, knowing that obviously a little bit of relief rally is expected in a bear market, but such a powerful move. Tesla moved from 700 to 900, and sharp moved from 500 to 700. So is there anything underlying going with this money managers playing with heavy is what I'm what I think, but what I didn't understand if they are all hedged so well, knowing that something could happen like a capitulation or something, but how come the buying has come in? That's where I was like puzzled myself. I'm trying to kind of rationalize and understand at a high level. Yeah, I know it's very loaded, but anything you guys think from your perspective, knowledge you can share that might be helpful.
Yeah, that's a good question. So there are a lot of indicators for you to see that kind of data, like P-call, which gives you the ratio of put versus call for all options, right? So if you take a look at this, and let me remove all these studies and go to daily data.
It's kind of unwarranted 4 days of 20, 30 points move in QQQ and SPY.
Yeah, it's not totally unwarranted. So unfortunately, this is how the market works.
That's what I'm trying to understand which direction it came from. Is it money manipulation by managers? Or
let me put some lines over here. So if you see anytime this is going above, say 0.85 here, and I think I have to,
ratio, right? Okay,
yeah, and I think I had to probably go to SPX here and see what happens when it goes above that value. You can usually expect some kind of a drop because everyone is buying puts. Everyone is buying calls, and the market will do the exact opposite. When everyone is buying puts, this ratio is extremely high. So it is put divided by call, right? So let me write it here. Put call ratio is put divided by call. So if everyone is buying puts, the value of this will obviously be higher, right? Because the numerator is bigger than the denominator. And what happens is you will find this kind of rallies. See what happened here. We had another rally. And of course, these are all rallies within a bear market, right? What happened when it was at this point, right? If you see here, we rallied again. So market will do the exact opposite way, and people will just blame if you don't know what is happening. I have seen in a lot of groups, people blaming market makers. They have nothing to do with it. So market makers make few cents on every trade that we place. It might be they don't care whether you are winning or losing. They are just interested in making 1 or 2 cents for every trade we place. So if we don't know this, we will lose money.
No, no, I kind of hear you the point there, but I was thinking, where does this whole buying came in? Is it just the short covering, or
Yeah, it is.
um,
This is what it denotes, a short covering, because everyone was positioned in a bearish way, and market
yeah.
did the exact opposite. So who is buying it again? Don't
That's where with all these the dynamics in the market, the retail investors being so scared. So I'm just trying to, okay, if Tesla went from 700 to 900, it is because a lot of people shorted the covering, or money magic. Yeah, so that's where I'm kind of trying to understand that there is a definitely volume, there is a lot of intensity pressure. If you see, it's a powerful rally. It's not like a normal rally, right? And it lifted every damn thing by 15%, like
Yeah.
indexes, everything, and that too in like 2-3 sessions. So this all money flow has to be from somewhere, or I don't know. That's what I'm trying to understand. If the one rationale I had is, if people have sold their calls anticipating, it's not going to go high, they had to do their covering of calls, buying back, which could have increased, kind of a volume of buying things, which push it higher as well. So
Correct. Yeah, that's exactly what happened. And obviously, this kind of move will not happen just with retail traders. So all these big funds will be coming in and buying it.
yeah, you need like billions of dollars to make the kind of moves. But average retail, investors already beaten down. Nobody's buying, Tesla again at 850, not knowing it made 1,600, right?
So yeah, I don't know whether you guys attended last week's session. I just gave a simple tip about market analysis over the years. So all our bonus payments by all the companies generally hit the market around mid of March. So a lot more money will come into the market in the mid of March compared to any other time of the year. Right. So that is what I said in the last week's call, that don't be short in this market after Wednesday, because one is FOMC, that is the catalyst, and another one is March 15th paycheck. March 15th paycheck was on Tuesday, just before FOMC.
Yeah.
Yeah, but so again, I had the same question as RK asked. So Pradeep, so this is it put call ratio is one indicator to forecast if too much of bearishness, or anything else we have to be careful to look forward in future?
Honestly, there are thousands of these, Shiva. You have to use it with all other things. Just because the put call ratio is high doesn't mean market will definitely go down. See what happened here. It was high, but it kept on going up, right? So it was high here, but we just got a dip for 1 or 2 days. Most of the times it works, but you need to know when it doesn't work as well.
So I'll say something to this just simply this way. There's no indicator. Simple. That's why and it's not that we don't use it. Pradeep uses it. I use it. But we don't rely on it. That is why when Pradeep also does this, he doesn't really use any indicator, because he doesn't need to see where the outlook is. So anyone telling you and kind of relying on some baloney magic indicator or trying to tell you this, don't stay the hell away from them. Because there is no such thing. Because even if there was something that was made, it will have a domino effect if enough people start using it. So that will never come. Don't rely on any indicator completely, because there are so many things that impact whatever happens. And that is why even we cannot be 100% accurate or 100% right. And that's why you stick with probabilities.
No, I totally agree. There's no indicator. But I'm just trying to understand the rationale of such a massive push and buying happening in last 3 days, when the entire general population was obviously market makers definitely do opposite. They have the power and they have the money. So I'm just trying to understand the rationale, like how come they pushed every one of these as 200, 300 points, just 2.5 days of trading.
So here's the way I look at it. The kind of reason why, and I, don't get me wrong. I had some long positions also, and I took them off. We took them off very on the cheapest point. So when short covering rallies happen, you have to understand that now the indication is okay. Now a lot of people were short from a certain level, and they have been shorting, but now they can't go any further.
I agree.
So if you go further down, it needs to go rally up, because now if it's not going further, they're buying their short positions back. So that's what causes, and when that happens, it happens like exponentially, like very fast.
Yeah,
and that's
I think it's all timed exponentially appropriate point, and they push billions into it.
Yeah.
Whatever they needed
Exactly.
to
So
do.
they are covering, and now there will be a lot of people who would start thinking like, oh, we are at the bottom. So and like Pradeep said, there is a chance we may push a little higher, right? Is this a place where you can go long? Me personally, I probably wouldn't, because what I think, yeah, sure, there is a place where there's a chance that it goes higher, but there is a greater chance that it comes further down.
Yeah.
So
that's what. Yeah.
So it's just.
I think so.
Yeah. So this could lead into a couple of days, assuming that other people start thinking like, or the market thinking like, hey, we could have bottom and this is the time to buy. There will be people there are people who are buying the dip. Not every dip works, and I'm sure there are people buying dips every time they get. But and I'm not saying I'm right. I'm going to be right. There's a chance that it doesn't come down. But as of right now, I think it does. I will change my view when certain things that I look for, I see them differently. Then I might change, and I might change my bias to the long side. But at a higher time frame, we are still on the short side.
No, I agree. I kind of thanks for. Yeah, I was thinking the similar passion, but I just was trying to understand where this damn money volume coming. Just except the hedge funds, mutual funds, probably they got to be a lot more people shorter, the big guys at the level they are supposed to, because that's what they do, right? And then probably this is the best opportunity because they have seen it bleed so much, and because it has to be such an. I'm not saying it's a coordinated activity, but it has to be such a timing right, which can produce that kind of a rally.
Just to let you know, I think my perspective, just wanted to add.
Sure, Ram.
So March, generally in the month of March, hedge funds are entitled to show some profits to their position. Forget about whether we are in a bear market or a bull market. They would like to adjust their positions in such a way that if they are in excessive positions under like huge losses, right? So what they do is they're going to dump those and they're going to buy the high momentum stock. So, and such a scenario would persist generally in the month of, just see in the March timeframe. That's a good time where, you can actually look for at least 5 to 8, or sometimes, if you're lucky, maybe up to a 10% rally you can expect. And that is what is happening actually. If you honestly ask me.
During the March timeframe, okay.
In the March timeframe, so you look for any subsequent years. Go see the cycles in the month of March. Let's say even in 2020 crash, we had to reverse on exactly March 23rd to look for a massive rally or a short covering, and at least I've seen even in the prior markets, right, like where even in the worst market scenarios, at least 5% pullback had happened, at least 5 to even 20% rally had been seen. So I'm expecting at least the momentum continues, but there is a correction pending. I mean, to say there's a pullback. But we have to play according to the levels. And I'm not sure like how many of you joined for yesterday's some productive discussion that we had on the markets on the charts especially. So yeah,
I was on it, Om. It was helpful with the whole
Yeah, Om is going to do that even tomorrow with the free group, so please feel free to join that. Okay, I'll go to the next question. AMD, see, it has held this level quite well multiple times. I think it looks good for a revisit of 122. That is still another almost 10% rally. But I would be booking profits around 122 if it gets there, because in the long term, it looks to be forming a big head and shoulders top here. And I expect it to break this 100 very soon and come down to around 83 to 85. Okay, I think this will come down. If you look at,
yeah, Pradeep, I think I did post. Maybe I can even go there. That is maybe it might be helpful as well. So
okay, so if you look at, yeah, sorry, go ahead.
No, I think it's there in the my chart which I posted in my views long ago, and that is still seems to be, it looks to be working out. But I see a huge resistance at 114, 115 range, and even in this recovery market, right? AMD could not break or close above 114, which is bizarre. And whereas Nvidia was rallying, I think you don't enter or any positions unless until it breaks 114 on closing basis. So
on a monthly chart, if you see, this is a key area of support which needs to be revisited. It has to come down here, in my opinion, which is around
89, 90 to 89. Yeah.
Around this price, it has to come down. So be careful entering it now, or it's time to exit. In fact,
yeah. Yes, you can even see that even my view on the chart, how to refer that is still valid. Go there.
Pradeep, what time frame you are expecting it to go down in, like 20 days, 25, 30 days?
I think before May, we should be looking at this level.
Cool. Yeah, because I'm short on it and I have been banking on it, and I was wondering, am I going to lose my premium or what? And my order is 195 put.
Okay. Yeah, as long as you have sufficient time on it, I think you should be okay. If it closes above 125 or so, I would be concerned. Otherwise, I think it is okay to be short in this.
Okay. Yeah, I still have around 25 days.
Okay, 25 days is probably too short a time frame. Yeah, be careful. Maybe you might have to book, reduce your loss and open for something in May or June.
Okay, we'll do that. Thanks.
Okay, what else? Okay, Neeraj is asking, Pradeep, can you please explain your MNQ trade couple of days back on the chart? What time frame? Okay, I did so many MNQ trades. I don't know which one you're referring to, Neeraj.
Pradeep, the last one, the one which went a couple of days back, Wait, let me
Okay, so I think where I had
the one where
I
I
remember
shorted it
it.
for one
I
instant,
remember.
and Nick also shorted that thing, but you were long on MNP.
Okay, I remember that. So I think it was a 200-point ride I got. Let me see on which day I took it and exactly the time frame where I remember I gained 205 points on it. So
Yeah, that's the one, the 205 points. Yeah.
This was on March 17th at 11 a.m. So what happened on 17th? 17th at 11 a.m. is around here. Yeah, around here. This day. So, okay, that's a good question. So see how the Bollinger Band was contracting here. Okay, what it means is it is entering a squeeze on hourly, and there are specific indicators for that as well. You can see at study TTM squeeze. I'll show you what happened on that day at around 11 here. So I was bullish. March 17th is again Thursday, right? My general view was not to be short after Wednesday. I had given that outlook. So I wanted to be long because this was a big move after Fed announcement. And this never really gave back any of the gains, and it held this level as well. If you see, this was the previous day's high. It never really gave back that. It held as support. So I have one confirmation that the previous high is acting as support here, and it is entering a squeeze, and the likelihood of this squeezing higher is the probability is much higher because a lot of people were positioned short in the market, and short covering rallies can be huge. That's what happened. So this was almost 200 points right from here to what price did I exit? I think I remember it was 14,072. Right around this price I exited 14,072. Yeah, I just played the squeeze here.
Usually when you see that, like say for example, you are seeing the 1 hour chart, so you always follow that 1 hour chart, because like for us, if I'm taking a trade on your, this is what for my understanding, if I'm taking a trade on your belief, yeah, I do believe that you are much better. But for us, not understanding, at least if we know what time frame, then we can just go ahead like that. Because otherwise, a person like me will be running around like a chicken without a head, not knowing where that thing is going. Because one big candle comes in and damn, you think, yeah, all is gone.
So,
it comes with experience.
So Neeraj, that's why if you take a trade, you take a trade, right? Because each trade could be constructed differently. There's no, someone looking in the movement of that squeeze also could have seen differently, and someone could have been looking at a different way to trade. It's just bottom line, you're not going to be always right, and you just need to stick to how you trade. Trying to mix it with 20 different things. That's where
I do understand that, but for us, we know that you all are calculating something and going beyond further to that. But for us to know a little bit how it is working, that will help us out. That's what
That's a great point, Neeraj. I was about to ask. It's a really great point. Even I had the same issue, Pradeep, when you posted. I wasn't sure, like, what should I do? I'm also seeing the squeeze. Should I go for QQQ? That means you have to continuously watch when you exit, it is sort of, if you know a little bit ahead, right, in time, that will be really helpful for not only for the entire members of the group.
That is why don't
you all have that expertise and experience. I understand it's not going to come up with us right away. It's going to take a long time, but just for our knowledge, nothing else, to understand. If it is possible, if not, that's fine then.
Yes.
We'll be just blindly copying you, and we can go ahead. And I know nobody's perfect. Yeah, sometimes it goes down. We are not going to. I'm not going to come up and blame you all. Hey, why did you do this?
No, Neeraj, I'm referring to more so on when you, I'm referring to more so on when you trade on your own. So that's what I'm saying. Like the point was that you try to mix different trading styles. Like, let's say you may have a style that you have already adapted to, right? And then you try to adapt to how Pradeep likes to trade. And then you try to adapt to how I like to trade. Even though me and Pradeep kind of trade the same way, but we still have differences on how we look at it. And we don't have to agree to the same. So that's why I'm saying, so when you are taking a trade, take a trade on how you analyze things, and then try to go back. If that trade, pay more importance to the trades that don't work, because that's where you need to improve and focus on what happened at that time when you thought something else should have happened. Because people have this wrong perception of keep talking about or keep bringing up the successful trades that they have, but then they don't want to talk about, or they don't want to focus on the things that didn't work for them. And that is the only way to improve and move forward, right? I focus on the things that didn't work, that why it didn't work for me when everything else has. And that kind of gives you a perspective of what you need to focus on. That's where I'm coming from. I personally don't care. At the end of the day, the books is what matters. What I get one trade or two trade wrong, it doesn't matter. At the end of the day, my books will always end up positive, right? So that was
probability, guys. It's all about probability. So what is the probability of, could I have lost money on this had it fired short? If it had fired short like it happened here, of course this wouldn't have worked. And I am ready to take a risk even if I have a 70% idea that this is going to work in my favor. I'm going to take a shot at it. It comes with experience, and that is why we are having these sessions regularly, and we will continue to have it monthly, every month, so that you guys know what you need to look for. Don't just blindly follow someone. Just because I bought doesn't mean you need to buy it, right? You go and check yourselves whether you want to, like Shiva said, how do I know whether I need to take it? Look at the chart yourself. If you are in agreement, go enter the trade. Otherwise, just sit aside. That's the best thing to do.
So, Pradeep, for those who don't trade futures, right? I think which many of us, like not many, are so ready to take the risk. So, do you advise, like, if you place any MNQ futures, can I convert into, say, at the money QQQ next week call by default, something like that? Would that work? So, assuming like we trust your judgment.
Yes, you can go for at the money 7 days out QQQ.
I think that's very clear. But just want to know
option.
And I would just say this on my MES or ES or NQ, whatever it may be, don't convert them to options because mine will be scalped. Do not even ask me, because if I was to trade options, I'll post an option.
Yes, I agree to that. Because
No, I'm just saying for myself,
time,
right? Because I'm
time,
looking for a quick move and take that money off the table. I'm not looking, because if I'm looking at more of a long term, I'll post that way. So just so you don't, Shiva, so you don't generalize on everyone.
So Shiva, I want to understand, like, what is the hindrance in trading futures, right? Why do you want to just with options? We are trying to lure you out of options, if I can say so. Okay, I know a lot of people are hooked onto options, but say if I capture a move from, let's take this example, and I will let's, for the sake of it, let's spend some time seeing what happened to the option leg at that time. Okay. Okay, let's take this itself. At 11 a.m. when I entered, where was QQQ, and at what time did I exit, and what would have happened if I had taken QQQ? Let's see that. Okay, I want to understand why people don't want to trade futures.
Yeah. So and it's and the reason why it's not an easy conversion of
so 11
futures to options.
I closed this at 152, right? So the trade lasted for 2 hours, close to 3 hours. Let's look at QQQ. March 17th. So if I had gone 1 week out on March 17th, I would have taken probably March 23rd expiration options. Okay. So let's take a look at March 23rd expiration option at the money. So I want to first find out what was QQQ doing at the time. March 17th at 11 a.m. It was at 338, right? So at the money, March 23rd, 338. Let me copy this and look at the chart. So where is it? Okay, 17th at 11 a.m. Okay, I am here. 17th at 11 a.m. Okay, the date and time shows up here if you're wondering what I'm trying to do. At 11 a.m. this was trading at $5. Okay, I don't want to, here and there few cents we can leave it. So for easier calculation, let's assume it was trading at 5 and I sold it at 152, right? Let me just go to 5-minute chart. That might be better. On 17th at 11 a.m. it was here at 5 and I sold it at 152. So which means somewhere around here, 8, right? So from $5 to 8, $3 profit, which is still a good amount, right? $3 on a $5 is 60% within 3 hours. Not bad, right? So how much you would have spent for this? $5, right? Had you traded MNQ on TraderWeight, you would have spent $200 for one contract. So technically you could have taken 2.5 contracts of MNQ. Since we cannot do 2.5 contracts, let's go with say you spent $400, right? You bought 2 contracts of MNQ, and we got a 205 point ride. So 205 means 410 points in total times 1 point is $2. So you would have made $820 in profit, whereas you made $300 in profit by trading options. Tell me which one is better. We are comparing apples to apples in terms of your purchasing power or the capital outlay. In Tradeovate, you would have spent $400. That is less than what you would have spent on one QQQ option, because you would have spent 500 for a QQQ option. So you are spending less, but you are making more here, 820. So this is what I want to emphasize. I know a lot of you are still not convinced to trade futures. Your capital outlay or the capital efficiency for the trade is extremely big in futures compared to options.
So I'll kind of say this, and this is a little
And
bit.
also, if it goes wrong, no, let me just compare. It's a double-edged sword, right? If it goes wrong, obviously you can lose more in futures, but in options, what you are going to lose is the $500 that you paid. You cannot lose more than what you paid in options. But if you are risking anyway this much, so it all comes down to risk management. So say you entered a trade and you are spending $500. Obviously, you are not going to allow it to drop to zero. You are going to take some action. Say if it falls to 250 at 50% loss, you would say probably it's time to exit. You can do the same with futures also, right? If you had made a $250 loss, which is almost 100 points, right? 100 points is quite a big buffer in terms of stop loss. So it comes down to risk management and capital efficiency. That's all.
Yeah. So, and I'll put something on the other aspect also, right? Not trying to contradict, but it is a little bit contradicting to what Pradeep said. But once again, I'll start with this: options and futures, they have their places. That is why I still trade futures and options, right? Because you have to understand, there's a lot more things that go into options also, with the whole time value, this, that, and the other. Now, and that is why I said, do not convert my future trades into an option trade. Simple as that. Because to me, you can't, to specifically to Shiva, that you said, can I buy a week out? I don't know what logic that you are applying for a week out, because that trade over there in future is going to be closed on that day 95% of the time. There will be rarely a position that Pradeep or myself would say, hey, I'm going to hold it overnight. Which
that is fine. That is fine, Nick. What I was telling is I have some sort of a baseline, right? If you want to convert into option. So yeah, you don't convert your thing to option.
So if you are that active, right? If you are that active, actively following, and if you can't follow actively on futures, and this is I'm telling you fact, because of any one of us just keeping it transparency, right? And this is. So you know the risk that you have to take, or that you want to take. Because if you want to take equivalent of what that is, buy a 0 day or the closest expiration. And you know the risk is going to be that you're going to let this run down to zero. And that is where you compare to of what you want to do. If you want to trade, don't go a week out, because a week out outlook might drastically change.
Mm-hmm.
Pradeep, my point in asking your time frame was because if I'm watching like 15 minutes or 5 minutes or 10 minutes, and then it goes up and down. But yeah, I do respect your stop losses and everything, even with Nick and oh, you guys are, that's why. But just for us to make it understand, not being in a mind which is like, what is going to happen? What is going to happen? What is how it things are? We are not that experienced. That is why I ask you what time frame. So at least we'll get to know, okay, from here to here. And you might go for 200 point plus. I might cut off my profit at 50% or 100 points or 75 points, whatever, because that was my appetite. And that's how it is. So that was my purpose in asking you the time frame, nothing else. And you guys are very explicit in showing where, like, if you want to take a QQQ or SPY, yeah, because you, as Pradeep always tells, and Nick is very clear that, yeah, he is scalping, yeah, that's fine. We understand that.
Hey guys, let me add something here. See, options trading, you know it very well that let's say if you are a buyer, option buyer, right? So if you are holding that position and market is always supreme, that it is very sensitive to any news or something, you know, sometimes it may not be news that the market makers may try to hold, but there are sudden intraday dips which might happen, which we have seen even the overnight scenarios, right? There's a huge drop which would happen and recover in the next 1 hour. We have seen such scenarios. If someone who's trading in options, you should manage your positions, to be honest, even though anyone for that matter, even Warren Buffett gives the position to you with a stop loss. So it is up to the individual to know the risk reward or the managing their positions and the contract sizing. And also you should have sufficient appetite or capital to make sure that you can re-enter, or not to average, because averaging is not our business for sure. But at least I would say if you can hold, you know, you have sufficient time for options to breathe. Suppose sometimes, you know, there might be a dip due to some Fed decisions or something, but you should be in a position to hold those. And at the same time, position sizing is very crucial. Forget about, you know, whether based on Pradeep, Nick's or anybody's, you know, directions that you convert that into options, that is up to you. But the position sizing is the key here. If you trade minimal 2 or 3 contracts, or if you limit your contracts based on the capital that you have and that you can hold, and you think that, okay, out of $1,000, I'm ready to take $200 to $300 loss, which is okay. But the reward is like huge, maybe 50% reward or 100% reward. It's again, you know, I'm just giving some thumb rule here because like most of the successful trades that we had given, right? I gave like a buying zone. I mentioned, like, you know, I'm taking some of the examples. I'm telling that if this SPY crosses this level, which means that you are good to take your position, but on closing basis. Then you yourself can watch volume, but you can ask the questions like, you know, what is the cushion that you can see? Because sometimes, let's say I've mentioned now that AMD, if it crosses above 115, right, on closing basis, I'm sure the machines will start reacting, and the price, that is like it's like an elastic band, right? You know, if that crosses, then there might be a lot of other components or metrics would jump in. It could be a short ratio, or it could be a new money which might be coming in, or retail participation. Then the price will obviously react. You know, it will go up. So, and you need to make sure that you follow a policy called see profit, take profit policy. Then, you know, don't just look back. Once you close your positions, no, you should never repent. Oh man, I should have held it. Maybe I should have. So you will have a guide, like the levels will be given very clearly, right? Like for example, Nick, Pradeep, or myself, we will mention those levels. But you should learn to execute actually, because execution, I'm telling you, even though somebody is spoon-fed, even to include myself, I would say. Unless I put execution, technique to myself and I manage my account, it's very tough. Yeah. Sorry, Nick, you're trying to add something.
No, I was just going to say, listen, as far as I just wanted to just basically and not take over the conversation from Pradeep either. So I just wanted to make it clear that if I'm posting, that is what it is. Like, I don't want everyone to walk away with, because of Shiva's question, they can convert it into a week, because it is not a fair comparison and it is not a fair trade. So never. I will give you a precise entry and a precise exit. And I will, if you ever want to see that if I got a fill for that price, I will show you, because there will be never a trade that I am not involved that I post personally. So when I exit, that means it's exit. If I say, hey, you should take based on your account size and based on your risk, because I post a lot of times, say small accounts take profit. Don't wait for me to take profit. And that is what we are giving you, trade management. Because to address it to Neeraj's question also, hey, based on what are you doing this, or based on, I understand you can't look everywhere we look, and I could be seeing 20 things, and therefore we give you an entry and we give you an exit. Now, any other time you want to take another trade, that's on you. I am never going to stop you or say, don't take this, but I can't be held accountable for the trade, or I can't always see or what that trade was trying to do, because I'm not the one who executed it.
So I want to just add one more thing. I'm not saying you need to always trade futures. There is a time for futures, there's a time for options. So the way, at least I look at it, is if I'm not very confident of a certain level, I might go for even options contract, because the maximum I'm going to lose, even if I go with a lotto call, is whatever I pay. So lotto for me is anything around, less than 100, or maybe up to even 150. Okay, less than 150, I would consider it as a lotto, and I'm ready to risk it all. Even if it goes to zero, I don't care. If that is what my definition of lotto is, and most of our admin's definition of lotto is that. So kind of a lottery ticket. If it works, it pays you really well. If it doesn't work, it's not a deal breaker. It doesn't break your bank or anything like that, right? So I go for such things when I'm not very confident about a level. Otherwise, I prefer trading futures, which will give you a lot more leverage. Okay, I think we have spent close to 2 hours. Maybe we will have 1 or 2 questions and wrap it up. Anything else?
Is there a way to keep reminders popping up in Telegram about a meeting? Sometimes I miss it, because I don't really follow chat all the time. Maybe I'll also explore. I was just throwing it out.
Actually, a good question. So I do see a lot of you are here. So Pradeep, do we want to come to like an agreement whether we want to post this kind of meeting in the alert channel, or maybe I think we can do it on the channel also in the group. So with the alert channel, I think everyone will get it as a notification, as most people might have just done it in the alert.
Yeah,
I just thought about it. Not everyone might be looking at both places.
Yeah, I think we can post it in alert, but generally what I would suggest is at least keep your pop-ups or the notifications on for Telegram app in your phone. That way you'll at least see when the meeting started. I posted it that we started the meeting around 3 p.m. today. So at least you guys will get a notification that it started. All right, if there is nothing else, we will end it here. So tomorrow we are going to have another session that is not going to be this detailed with the general public. I hope you all are part of this group as well, S&P Traders public group. If not, we will post the link to that as well. So you can come and join us tomorrow. Om is going to take that session tomorrow with everyone. All right, guys. Thanks a lot. Thanks for joining.
Thank you. Thank you very much.
Thank you,
Bye.
guys.